Good afternoon. This is Ken Long from Tortoise Capital Management. I want to take a look at a ready, fire, aim, or a regression line crossover technique for March 19th, 2012 using symbol IWM, the Russell 2000 ETF. We're going long. Quick look at the chart. The vertical blue line is when we started stalking it, and that was after it opened here on 3-minute charts. Price went up. Nice burst up, pulled back to the Bollinger Band 30 mean, found support, and then took off. When the 10-period regression line and price leave the Bollinger Band region, we go long at 83.60 with a 25-cent initial stop. That's the horizontal red line. By this time, the regression line 30 has started to move up too, and the price never really looks back. It's up to 83.84. We can move our stop to break even by that time. The train is leaving the station within about 20 minutes, and everything looks good. Next thing that happens is that the train has left the station, continues to go up at 84.01, just past the round number. Make a second entry with an additional 25-cent stop. So now we got 2 positions on. Train continues to leave the station, is moving up. When it gets up over about 84.20-ish, we pose the question, all right, what is a range stat move? And that is the average range of the last 30 days plus a standard deviation measured from the low. So we go back to the low of the day, move that distance up of one range stat, and it comes in right at 84.30. And that's our boundary between rational exuberance and irrational exuberance. We're not entitled to believe that it can go much beyond an average range plus one standard deviation. If it does, we want to make sure that we don't give that stuff back. So when it moved through 84.30 and got up here to 84.34, I moved my stop to 84.25, and I'm very careful about not giving back much of this gain from 83.60. I want to keep. That's the rational move that we're entitled to see. I want you to notice that once the regression lines leave the Bollinger Band region, we have trending behavior, and you'll notice that there's no price at all inside that Bollinger Band, inside that river, and the mean is going up steadily. The solid purple line, these are on every 3 minutes, that's the volume weighted average price. What I liked about this move here was that you had a sudden jump in the VWAP, and that says that volume came in and bought right there where we did, and that's a good thing. That means there's more juice ahead, and we're going to see how that VWAP works a little bit later as a magnet for price. Next chart up, we get the price went above that 84.30 range stat move. It pulled back. I cashed one position on the early trade, and that was slightly over 3R. It found support, so we've got one position still going north. It hits 84.39, starts pulling back at 84.36 because it looks like it's getting late in the day. We end up taking the second exit at 84.36. That gives us an average exit on those 2 positions at 84.33. It nets us out at about 4.3R, and I'm pretty happy with that trade. And then what I want to bring to your attention is what happens next. These were the 2 exits that we made. It turns out to have been right near the top of the day. When the regression lines re-enter the Bollinger Band region, when the 30 comes back in, you definitely want to be short, not short, but you want to be exiting your long positions by that time. So really the discretion zone for me was from the time of the first exit to by the time the 30-period regression line comes back in. So no matter where inside here you get your exit, you're going to be pretty happy with a trade that was 83.60 to, worst case, you're going to come in about 84.20. Now, theoretically, you can be looking at taking a short position when you have the regression line crossover on the upside, but we're in a bull quiet market, and that was so strong that you would not be wrong to wait for the the regression lines and price to leave the Bollinger Band region. You can actually do it here when the blue line exits. If you wait a little bit longer, you might have gotten an entry right around 84.10 to go short. And sure enough, If you play the VWAP as the target, a return to the volume weighted average price, you could end up picking up one, maybe almost two more R. I didn't do that. I was busy this afternoon, busy digesting the 4.3R, but there's a potential 2R retracement in here. What I want you to notice is if you just wait for this break, if you just own 8360 and take it all the way to the high of the day, when you're entitled to believe that's all you could get with the range stat, and then rode that thing all the way back, it closes right about at 83.68, and you're holding on to an 8 cent per share after looking at a really powerful trending, very clearly trending behavior all the way up. And then when the regression lines start failing, they come back to the Bollinger Band. You have signals to get out up in here if you're trying to harvest the most of it. Certainly not later than this, and by all means not later than this, which is sort of a pretty clear signal to be going short. But if you ride it all the way back here, you may not want to be an intraday trader because you were given a very clear trend intraday, and there were two opportunities to play trending behavior. This just is a demonstration of one, and then with adding to the position after we had a win in hand. So that's the Ready, Fire, Aim, or the regression line crossover system for March 19th, 2012, using symbol IWM. Thanks for your attention.